Listen, I don't know what the functionality of high-frequency trading exactly is. At the end of the day, they don't walk away with a position like a portfolio manager does or a hedge fund manager or any of us on the desk. There's no assumption of risk there. So they're just in the market during the course of the day, and I don't know if that's proper. Rick talks about the market in the 70s. In essence, if you remember the open outcry model, you had the function of what was known as the caller. He basically was the overseer of the market. Guy, Pete, Rick, we all remember this, and he basically stopped the market when it was dislocated and put it back together. The problem, as you said before, is it is very difficult to create the function of a caller in this technology market we have now. But you know what? We're going to have to.
And Joe, to your point, they not only don't bring home trades for the day, they don't bring home trades in 2 minutes, in 2 seconds. These are trades that are high frequency because they're trading multiple hundreds, thousands of times in seconds. So this liquidity issue is a very interesting one. And part of the reason that we lost liquidity yesterday is because they expanded and they took their markets off the board. That's what the algorithms are told to do. If they get hit too frequently at a certain price, that frequency leaves. They get wider, they get smaller. That's what we saw yesterday, and that's why those volumes, that's why we saw the explosion in the volatility.
And I would also just quickly add, I would suspect today that we had such a volatile session because most traders like ourselves recognize that it's time to be small and step back. I truly believe the whipsaw you saw in the market today was driven by computer trading taking over.
No, and I would echo that. You know, we are as small as we've been in months, but the other thing I would say is that in markets like yesterday, actually, liquidity actually dries up. So, okay, we saw the aberrations in the P&G and the Accentures, but the reality is what happened yesterday was even in developed markets, you saw liquidity get sucked out, at least momentarily, when people see things diving, and that's what predicated that move. Markets were diving. They were diving on sentiment. They were diving on fundamentals. They weren't diving on technicals, and then the technicals took over. So I think people are overdoing this on some level. I realize that there's
and you know what? It's a confidence issue, and I'll tell you, viewers, the exchanges can work this out. Maybe they have to step back and let a few shillings go by and not look to maximize all business, do what's best for the marketplace, but they can restore confidence in the marketplace, and I don't think they need 1,300 pages to do it. A few logical changes, maybe the uptick rule again. They need to be short, brief, and concise with the regulation.
Well, Rick, real quick, I mean, I think people are trying to determine if the fire was started by a match or by a blowtorch, and I'm not sure if it even matters because, frankly, there's a fire. If if there were buyers in this market yesterday, you wouldn't have seen the exaggerated moves that we saw. I think what the market's trying to tell you is I think things want to go lower. That's my take.
You know what? I couldn't agree with you. We're really, the issue of fixing the markets and confidence is important, but it isn't at all the dynamic going on. The markets, Europe, these are real issues. They're going to play out in the market, and maybe what happened yesterday just altered the flight path, but not the ultimate trade.
Right. Like we were saying yesterday on the desk, like what many analysts are saying today, it was a 400-point down market, and then we had the glitch, and then we ended about a 400 down point market. So there you have it. Rick Santelli, thanks so much. Always nice to see you. Time now for the Fast Money poll of the day. Tonight, we ask you, the viewer out there, should certain high-frequency trading be curtailed through regulation? A, yes, it serves no social purpose.
It's all about social purposes, of course.
That's
why we're here.
Social purpose. Or B, no, provides much-needed liquidity, which may also be a social purpose to some. Log on to fastmoney.cnbc.com right now and cast your vote. We are very interested in hearing what you have to say. We got more Fast Money coming up next.